Hello guys, welcome to the trading Parrot. Small app candle, another clickbait title video. Call again when there is a real emergency. And I reply, something tells me this comment will get deleted soon. Yes guys, we are very close now to achieving the full potential for this bull flag in terms of the broadening formation. That target is already gone. We mentioned in yesterday's video that the target for that was 60% of the total high of the broadening formation. That was located at around 57.5 and that is gone as well. In today's video, we are going to be looking at the level of risk that there is currently in the market from the most important perspectives, including on-chain data analysis, technical analysis, fundamentals, and a lot more. Guys, if you like this type of content, make sure that you're subscribed to our channel. Hit the notification bell so you get notified every time that I publish one of these videos. Watch this video until the very end, and don't forget to leave me a comment down below. Risk number one, we have a bearish daily hive sell signal. I'm starting with this one because it's the one I'm less worried about at the moment, and I'll tell you why. The hive is a signal that uses bearish divergences from multiple oscillators. Once it reaches a specified minimum number of divergences from different indicators, then it triggers a sell with a target of 2 times the average true range. In this case, that is 52.6. The reason I'm not that worried about that one is because the hive tends to be very accurate during choppy markets and during bearish markets. During an actual parabolic move in the last leg of a blow off top at the end of a bull market, you can see that all divergences are completely ignored by the price action. In fact, at that point, the ones that perform the best are the bullish divergences. They tend to play out as good as the bearish divergences play out in the bear market. At the top of the market, you start seeing that the bearish divergences start playing out. And that is a red alert because that means that we are shifting back into respecting the bearish divergences and there can be a large correction. In this case, we are talking about 55-56%. It's quite tough to say if this one is going to play out. At the same time, if you notice here, the RSI is currently invalidating the bearish divergence that we have up until yesterday because it's printing a higher high in the RSI together with the price. But that is totally depending on how we close today. If today the price ends up retracing and closing below the opening price, in other words, this candle turns into a red one, then it's very likely that the RSI is going to shift the direction pointing down, and that is going to form a double top here. That will be bearish, but so far, so good. Second level of warning, we have a grid of 82, and as I mentioned as well yesterday, given that we are still pre-halving, this is quite high to be seeing a grid like this before the halving. Normally you get some grid, but not extreme grid pre-halving, and that is usually combined with a lot of red. The high extreme grid is something that you normally see when you are on your way to a blow-off top or market top, and focusing on the current price action, and given that we are before the halving, it's a bit odd to be seeing so much grid and now starting to see extreme grid. Warning number 3. What you're seeing here is the aggregated open interest. This one is coming from High Block Capital. It's looking very different to other charts I've seen from open interests because this one is pointing out that we are at an all-time high of almost 5 billion. Open interests measures the amount of positions, both long and shorts, aggregated. And regardless of how this particular indicator is calculating things, I'm assuming that when I don't select an exchange, I'm seeing all of them combined. And seeing so high open interest, in fact, an all-time high, should give you an idea of how much risk are we currently taking. There's a lot of people in futures positions in a long. Number 4, amount average of leverage used by traders. This indicator here shows you the longs and the short in average what sort of leverage they're using. You can see here that the shorts are taking an average of 13x currently, and the longs somewhere between 24 and 20. Very recently, there were lots of shorts around 13th of January using extreme levels of leverage, and they got very quickly liquidated, reducing that total to 12. Leverage can go way higher on the longs as well, can go up to 61. For example, here there are some degens that were taking a long here and closing it very quickly. You can see how the leverage goes down as soon as they take profits around this area. The fact that the average of leverage is around 20, it means that it's very easy for the price to retrace and hit a stop loss and cause a long squeeze. That hasn't happened. I've been waiting for that for quite some time. It happened partially around here on this move down where we had a 20% drawdown, and that initiated when the average leverage used by the longs was around 32. This particular one could get a little bit more heated before it kicks in. In regards to funding rates, as you can see, we have had way higher funding rates. This indicator is showing funding rates from many exchanges and from different base currencies, and it's combining all the data into the same indicator. That is one way of looking at the funding rates, but I prefer to look at the funding rate heat map from coinglass.com and then looking at the 6 month. All these areas in yellow are areas where there's a lot of longs, and you can see how very abruptly they tend to close down their positions, and this goes back into this green peaceful times again. You can see that we are currently here in this yellow, just like we were around end of December. I flag with this gray line all the times where the market in general was in yellow. Here we are just seeing Bitcoin, but this shows you the times where all these positions got abruptly closed, and we are currently in one of those areas. This particular chart is free, so you can just search CoinGlass funding rate heat map and it's going to take you straight to here. Next one is the delta. The delta on Binance, it's currently skyrocketing. We've been talking about deltas of 50K. Eventually, we were pointing out that we were in the 400K, which is relatively high, but now we are at 1.2 million. And that means that the longs are heavily at risk of being liquidated. There's so much liquidity below the price that it wouldn't take much to trigger that long squeeze. The next one is one that I mentioned already in the video yesterday. There is a massive divergence between the trend of the price and the trend of the macro global liquidity. This is still coming down, and today we have less liquidity injected in the system compared to yesterday, just slightly less, but still trending down. We mentioned yesterday that the price tends to take from 1 month to 3 months to catch up on the divergence of injections into the system versus price action. This is currently a warning alert, but if the injections of liquidity start draining even further, let's say we cross the 60 around here or the 30, that will become a massive red alert. It's almost like take your money and run. In the past 3 months on High Block Capital, we see that most of the liquidity is below 40K, spanning to 33K. I'm not saying that we can get to those levels, but in January we punish the longs, now we are punishing the shorts, and eventually the price will punish once again those longs. If we focus now on material indicators, fire charts, you can see that this level that was protecting the price from crossing above 52, 53 got rug pull, and the price started shooting all the way to 60, and right now at around 59.6, there is some liquidity containing the price from going further. From looking at the CBD, you can see that now all the way across the board up until are buying, except for the wallets with less than $1,000 in Bitcoin. Next one, which is also one that I mentioned 2 days ago in my video. This is a must watch. I encourage you to watch that video. Even if you watch it again, because this is a very interesting theory. I won't expand too much on this, but we are on our way right now for this oscillator to hit a 13-year-old resistance there. I'm not saying that we must get rejected, but it's a level that we must respect because that's what we've been doing for the full lifetime of Bitcoin. If you wonder where is that located, we calculated that that should be somewhere at 62K, 63K. And that's because the level 0.5 in the oscillator here corresponds to this green line there, and we need to hit somewhere in between those two because our trend line is at around 0.43, 0.44. So not necessarily a sell signal, but another warning to take in consideration. I'm gonna also cover a few more things that are turning into red alert from the website CryptoQuant, but let's just have a quick look at how the bots are doing. I can see that now Moonriver, the one that's using the highest level of risk, has now taken over all the previous bots at 17% total profits in about 2 weeks. If you want to access any of these bots, there's a link in the description called Copy Trading Bots. All the instructions are in that link. And if you want to trade Bitcoin, there's a link in the description. 1 day left for the 60,000 in rewards. Use that link to open an account on OKX. Use the join button. The more you deposit and trade, the more rewards that you can unlock. Also, in the same link in the description, there are instructions on how to join OKX and use all the volume of your trading towards a free TTP subscription. The next one is the number of deposits. The number of deposits are currently skyrocketing. Yesterday, we have even some deposits for 500 million, 400 million, 400 again. So quite a lot for a single day. That's just dry powder that can be igniting anytime. The assumption is that when there is these deposits this large, no one is moving these amounts if they are not planning to do anything. And since the price keeps going higher, this tells us that they had the intention to sell. What we don't know is at what precise price. So let's have a look at some extra data. We can see here that the miners are moderately selling. We have a few extra red faces. The ASOPR is indicating that more investors are selling at a profit and that the exchange net flow total is higher than the last 7-day average. This is consistent with what we are seeing in regards to the live deposits coming into exchanges. The technicals, of course, they are almost all of them are in the overbought area. The long-term holders are as well in a red area, meaning that very old long-term holders are starting to move their coins. This means that they might be getting very close to their targets in terms of profits, and they might be considering selling. All holders tend to be also very large holders because they bought Bitcoin at way lower prices than most people did. The taker buy and sell ratio is currently also in red, indicating that selling sentiment is dominant in the derivatives market. More sell orders are filled by takers. Takers are just using market orders. They go and sell at the price that the exchange is giving them. Another important aspect that we need to consider is that the price is currently crossing the third level of monthly CPR. That was located at 58.6 and we are currently at 59.360. I'm going to scroll back in time. I want you to focus on how many times the price is above the third level. I can find one level here that was in January, in the beginning of this bull trend, when we started from 16 and we went all the way to 23. That was way beyond the third level. And then we can keep scrolling back through the bear market. And even during the bull market, it's tough to find anywhere where the price is above the top level of the CPR. Notice where it's happening again. It's happening in February in 2021. That was post-halving and it was very close to the market top. We had a few more pushes with some big corrections and that was it for the bull market. During halving times, I was able to find this area here in January 30 where we crossed above the third level. The next month, we made it to the first resistance of the CPR. At that point, the news of COVID were coming out and that dragged the market from top to bottom 62%. That's not what needs to happen right now. I'm not saying that, but just want you to be aware that this is pre-halving and it's quite normal to see, apparently, based on past performance, the price being above for 1 month the CPR It's not very frequent to see 2 months in a row of that. At least I cannot find anywhere where we do something similar to that, but it tends to happen in pre-halving. It tends to happen right before a blow of top. And I also missed this one in October that we crossed above the third level. In terms of technicals and RSI, for me to see this trend now completely broken, what I would like to see is that this RSI comes back down here and forms a double top, and then breaks this trend line, tests this as a resistance, and starts coming down. That's one option. If it stays pointing upwards, it might do something like this before it starts breaking below, just because this is a lot of momentum that will need a cataclysm really to not have some lower highs that can still come with a bearish divergence, meaning that the price at this point might be higher than here, and that will constitute the signal to start losing momentum, breaking the trend line, and start forming a channel in the future around this area. If you want to stay updated with what's coming next in terms of the technical on the day-to-day basis, make sure that you're subscribed to the channel. Don't forget that notification bell. That's going to help you knowing when the videos are coming out. And if you want the most time-sensitive alerts, follow me on Twitter. My handle is Trading Parrot. See you tomorrow. Take care. Bye-bye.